Welcome to another video of OptaTube. Today, we are diving into one of the biggest questions in energy markets. How on earth do you put a price on electricity? It's not like other products. It flows where physics tells it to go, not necessarily where the money is.
Right, so that's the core problem, isn't it? You've got this incredible network, the power grid, where electrons are zipping around following Kirchhoff's laws. They don't care about a contract someone signed. So the challenge is, how do we build a market that actually respects that physical reality? So, here's how we're going to break it all down. First, we'll look at the basic idea of turning physics into prices. Then we'll explore the simple approach, called zonal pricing, and uncover its huge billion-euro problem. After that, we'll check out the super precise alternative, nodal pricing, before we line them all up for the final verdict.
Okay, let's get into it. We're going to start with the most intuitive way to think about this, which is to treat the power grid like a really simple map, with just a few big countries on it.
And that's exactly what zonal pricing does. It basically carves up the entire grid into a handful of big areas, or zones. You could think of an entire country or a large state as just one single price area. And the key assumption, the big idea here, is that inside each zone, power can flow anywhere it wants, totally freely, with no traffic jams.
So how does it work? Well, it's pretty straightforward. Power plants and big consumers, they all submit their bids for the entire zone, not for where they're specifically located. The market then just crunches the numbers and spits out one single price for that whole area. The only time you see different prices is when the big transmission highways between the zones get clogged up. When that happens, the zones split, and suddenly you've got different prices.
And look, to be fair, there's a reason this was popular. This simple model has some real pluses. It's super easy for traders to get their heads around, you get a ton of market activity or liquidity because everyone's trading on the same single price. And paying the bills at the end of the day is simple. It was a really logical fit for Europe, where you had these strong national grids and the main bottlenecks were really at the borders between countries, not so much within them.
So simple sounds good, right? But what happens when that simple, elegant idea crashes head-on into the hard, messy laws of physics? Well, that's when you get a very, very expensive problem. And here it is. This is the critical flaw. The zonal market pretends there are no traffic jams inside a zone. But the grid operator, the person who actually has to keep your lights on, they know for a fact that's not true. This forces them to step in and manually fix the problems the market ignored. This process is called redispatch. So imagine it's a super windy day. You've got tons of cheap wind power in the north, but the lines carrying that power down to the cities in the south are completely full. The market price for the whole zone is cheap because of all that wind. But to stop the grid from collapsing, the operator has to literally pay the wind farm to stop producing and then pay a more expensive gas plant near the city to fire up instead. These kinds of interventions cost billions of euros every single year in Europe.
So the main takeaway here is that the market signal, the price, is completely disconnected from what's physically happening on the wires. And that brings us to the alternative, a much more detailed approach that's less like a simple map and a lot more like a high-precision GPS.
This is nodal pricing, which you'll also hear called Locational Marginal Pricing, or LMP. And instead of a few big zones, this model gives every single connection point on the grid, we call them nodes or buses, its own unique price. We're talking about thousands and thousands of individual price points, each one reflecting the exact physical conditions at that one specific spot. This is the design used across most of the US, which needed to manage congestion inside its huge, sprawling regions from day one.
So, what's actually baked into each of those thousands of prices? Well, every nodal price is made up of three key ingredients. First, you've got the base cost of energy itself. Second is the cost of the energy that gets lost as heat, just moving it down the power lines. And third, and this is the most important one, is the cost of congestion, the cost of those traffic jams on the grid.
And honestly, this is a total game changer. Suddenly, prices aren't just about general supply and demand anymore. They become these incredibly precise signals of physical stress on the power system. A really high price in one spot is screaming at you, hey, the grid is struggling to get power here, while a low price tells you everything is flowing smoothly.
All right, so we've looked at the simple map and the super detailed GPS. Let's put them side by side and see how they really stack up against each other.
When you lay it all out like this, the trade-offs become crystal clear.
Zonal has just a few price points, it completely ignores what's happening inside the grid, and that leads to those massive redispatch costs and really fuzzy signals about where to build new power plants. Nodal, on the other hand, thousands of price points, it fully models the physics of the grid, it nearly eliminates those manual interventions, and it sends surgically precise signals telling you exactly where investment is needed most.
And this is exactly why the most advanced power markets in the world are moving towards the nodal approach. It just does a much better job of managing congestion, sending the right economic signals, and ultimately building a grid that's ready for a future packed with renewables and energy storage.
And hey, this isn't just theory. Let's make it concrete. Take a look at PJM in the US. It's kind of the gold standard for nodal markets. And compare it to a zonal market like Iran's. In PJM, you have over 11,000 different price signals guiding investment decisions with incredible precision. But in a zonal system facing similar grid challenges, all those crucial signals are hidden, which leads to inefficient decisions and ultimately higher costs for everybody.
So as you can see, the choice of market design has massive consequences for everything from system efficiency to the clean energy transition. You know, if you're interested in keeping up with energy markets, power system modeling, and just getting insights on the global energy world, you should definitely follow our OptaTube YouTube channel.
So what's the ultimate takeaway here? It really boils down to this fundamental trade-off. Zonal pricing is simple. It's easy for people to participate in, but it's a terrible reflection of physics. Nodal pricing, on the other hand, perfectly reflects the physics, but it creates a much more complex world for traders and investors to navigate.
But that leaves us with a huge final question. As our grids get more and more complex, with renewables popping up everywhere and electric vehicles adding new kinds of demand, is a simple market model that just ignores physics a luxury we can no longer afford?